When you see the overall ecosystem go from 500 billion to 2 trillion in 9 months, and you're sitting there owning bonds at 40 basis points, you start to think, well, maybe it's worth a little bit of exposure, right?
So Morgan Stanley has given into pressure from clients and is the first allowing to Bitcoin funds access. So now Bitcoin has Wall Street stamp of approval. What is next? Well, welcome back to the channel. If you are new here, please subscribe. And I'm so excited to bring you our next guest, which is Dan Tapiero, founder of 10T Holdings. He's a global macro investor, a Bitcoin bull, and one of the best people to join while we discuss the larger institutions and also larger banks, especially in the US, getting on board with Bitcoin. So Dan, thank you so much for joining me today.
Happy to be here.
Great to have you, and super exciting time as well. And I want to take a look at the recent news that we have seen from Morgan Stanley, because this sounds like it was a very client demand led move. And I'm wondering if you're expecting from this almost a new wave of $1 million asset investors here into the Bitcoin space.
Yeah, thanks, Jessica. I think it is sort of the beginning. Morgan Stanley is definitely considered one of the thought leaders here in the US. And I think that maybe even 6 months ago, they probably weren't quite where they are today. And there is a little bit of an aspect of, there are some names like Boney and Northern Trust, more institutional names. You had Massachusetts Mutual, a very traditional insurance company. They've dipped their toe into the space in the past 3-4 months. Morgan Stanley Wealth Management, I think they have somewhere between $3 and $4 trillion under management. So potentially, I don't want to give you a percent and say, oh, X percent of that money is coming into Bitcoin. As you mentioned, there are only, investors above a certain net worth who will be allowed in, but they really are considered a thought leader in the wealth management space. And if you add up all the dollars at the traditional wealth managers, you probably have another 4 or 5 trillion at Merrill Lynch. It's certainly, probably around 15, 20 trillion dollars, perhaps even more. So I do think that this will be a very important underpinning for the market in terms of underpinning in the price. If we see a dip down to 30, 40,000, I think it'll be very well supported by these new entrants.
And I listened to a previous podcast that you did with Peter McCormack, and you actually said that the Bitcoin market cap was at that point of filming too small as a macro guy for you to think it's really appealing to these big, larger investors. Has that changed now in the recent months?
Oh, you got me. You got me. Yeah, it has changed. I think when I did that interview with Peter, what I call the digital asset ecosystem, so that would be the value of Bitcoin, the value of all the cryptocurrency, and the value of all the equity in the space together, was something like 400 or 500 billion. And today that's $2 trillion. And so what I said, I think back then was, I thought it was too small for institutions to use Bitcoin as a hedge in their traditional portfolio. And that is, these wealth managers often, they recommend a 70-30 portfolio or 60-40. So that's broken down equity and bonds. And I was talking about the bond part of the portfolio becoming not as relevant anymore at these low yields, and that Bitcoin wasn't big enough to replace that portion. I think that's still true. However, it has become much more liquid in the past year. And I think actually Michael Saylor's constant buying, but his accumulation of quite a nice position, I think shows that the liquidity dynamic has changed. So I think that's also probably why Morgan Stanley has come around. It's $2 trillion. There's certainly enough daily liquidity for any larger institution to come in and start to build the position. So you're right.
It has changed, and it's great to hear. Something that's so interesting to me about the Morgan Stanley move that we saw was the fact that they said that it was more for people with an aggressive risk tolerance. they have to have at least $2 million in assets held by the firm. What's your thoughts on this? Is it kind of a smart move, almost as a protecting smaller clients, or a marketing ploy to appeal to the bigger clients that do like a little bit more of a risk appetite? How did you view that statement?
I think that most of Morgan Stanley Wealth's clients have over 2 million. Do you see what I'm saying? So I don't think that's saying anything. I think that they have smaller clients, but those clients don't drive the asset growth of Morgan Stanley Wealth. I mean, I actually thought, they might even have a minimum of 10, 10, 15 million. I don't exactly know the number, but $2 million, as I said, is not that large a client. So they're basically opening it up. I don't want to say to almost everyone, but their interpretation of the risk, I don't think Bitcoin is particularly risky. I think it can go down in price, but I think the upside, of course, is much greater than the downside. And so I didn't read as much into that announcement. I mean, I think that that's the threshold in the US for an accredited investor. So that's not, not that exclusionary.
And what was your thoughts on the 2.5% cap then? Because that was also quite an interesting one.
Yeah, maybe that's their way of just imposing their view on their clients. I think that'll probably go up over time. Maybe this is their way of appearing to still be conservative in a way, right? So they don't want to say, okay, we love it, put 10% of your assets in here. I think they want to, this is their introduction. So I'm not that surprised. I think it's reasonable. Yeah.
Okay. So I know you're expecting now the likes of kind of Goldman Sachs, JP Morgan, Bank of America. Are you expecting their wealth management divisions to also get on board this train and maybe also offer something slightly more than a 2.5% cap, just to really kind of keep that competition going?
Right. Yes. I mean, in short, I do think, I think many of those clients, by the way, especially the more savvy ones, they have wealth managers in many different pockets. And my guess is you have a bulk of them that were doing business directly into the ecosystem and not through, let's say, a Morgan Stanley. So as an example, a client, let's say he has $100 million. He's been very focused on it. He tells his Morgan Stanley broker, hey, I've bought 5 million of Bitcoin at Coinbase, or I bought it at Kraken. And all of a sudden, the Morgan Stanley managers keep going back to their bosses saying, oh, we're losing this business, right? Because they get to charge fees on the overall amount of assets that they're managing. And so if assets are building outside of Morgan Stanley, they don't get to charge fees on that. So I think that that's a little bit of what was going on, right? The wealth managers were starting to see that they were losing out to some of the other the other Bitcoin-oriented firms, like even potentially like a NYDIG or River Financial or whoever. Yeah,
they want a piece of the Bitcoin pie.
They do, and it's growing so rapidly. And as we both know, there isn't that alpha out there in the traditional world. In fact, a lot of that is contracting. When you see the overall ecosystem go from 500 billion to 2 trillion in 9 months, and you're sitting there owning bonds at 40 basis points, you start to think, well, maybe it's worth a little bit of exposure, right?
Mm-hmm. Just a little, just a 2.5. So clients have really demanded this exposure. Could you paint the picture now for in the United States, what is the appetite demand for cryptocurrencies, maybe Bitcoin specifically? Is it the kind of hot topic point? Are you turning on Bloomberg and Fox and people are talking about this now? How is 2021?
Yeah, I mean, I think it's definitely increased. For the moment, it feels to me like it's just stopped at Bitcoin and maybe a little Ethereum. But, except for the people who are explicitly focused on it, it's very hard to understand, what's going on in, DeFi or with stable coins. I think there's one push that people are starting to understand, that you can get yield on your stable coins, on your Bitcoin. And I think this year's trend, if you'd asked me, like, what is something that could develop this year in the overall crypto ecosystem that could be quite powerful, it's this shift of deposits that are sitting at your JP Morgan account at zero yield into, maybe a BlockFi or a Celsius, or even now, smaller companies like Abra, even, that will be offering yield. And so this, someone in the space, I can't remember who, said the killer app for crypto this year is yield. And I think that could be a very big trend. Still early, not hearing about it, that much, but I think we'll start to.
And I completely agree that once this kind of age gap of 20 to 30-year-olds work out that your assets can really work for you around the clock, and yield is something which has such huge potential, I think that will really shift what we have seen from this space at the moment.
Why do you say 20 to 30-year-olds? Because I was thinking more that it might shift some of the older guys who are stuck with, all this cash and no yield.
I think maybe I'm speaking from experience, that people that are, trying to save for a house, they're trying to make these moves to the next step of their life, potentially, have worked out that what they've been told from you have to save and then get a mortgage and then spend X amount of years repaying it, that there's a new alternative now, which is more friendly for everyday retail investors, which I think is something which is incomprehensible to a lot of people that really don't understand it yet. But also, you're right, the older age gaps, people that are maybe retired and kind of earning that steady income too.
Right, absolutely. So I think that'll be an exciting trend to watch this year.
Is it slightly more risky now for retail investors, now that we are seeing from the Morgan Stanley news larger players enter the space a little bit? We're seeing larger kind of trades that might take place and shape the markets a little bit more.
Is it risky in what way for the smaller retail?
Is it going to be more price volatility now if we are?
Oh yeah. I think it's possible. I would think about it a little differently, because the institutions have such little exposure, such small exposure, these larger players. I think they're going to be buyers on dips, as they say, in the traditional market. So there'll be some volatility in the upside, but I think it'll be more supportive on the downside, because they will, a lot of them are patient. They're long-term investors. They won't want to, some of them won't want to pay up, and some will wait. So I think it actually may end up being good for the retail investors.
Fantastic. And now finally, because you've given us so much insight and knowledge to take away, but I'd love to touch on your new private equity fund and what the process is at the moment. And also if you're seeing any particular trends in your workday.
Oh, thanks. Yeah, no, we did launch a fund about a month ago, and we are investing in mid to late stage companies that are in the digital asset ecosystem. So these are companies with a market valuation of 400 million or more, and we're only investing in the equity of the company. So we're not involved in, the tokens or the cryptocurrency, and we just find that it's a bit of a de-risked exposure. These companies are a little more developed, and it's a broader de-risked exposure to the growth in the overall ecosystem. And so I have found that there's quite a lot of interest, especially from people who either they have their Bitcoin allocation or potentially, are a little nervous still about cryptocurrency, but they understand owning a piece of a private company, right? And so we've had good success there. So I'm very optimistic about the future there too. So.
Fantastic. Well, all the best for 2021. And Dan, thank you so much for joining me on the line. It was a really fascinating conversation, and I'm sure our viewers have learned a lot. Thank you so much for your time today.
Thanks, Jessica. Happy to be here.
Thank you so much. That's all from myself and Dan, but we'd love to hear how you found this segment. Drop your thoughts in the comments below on your future outlook for the rest of the year. And as always, please give the video a big thumbs up and subscribe to the channel.